Hey everybody, Scott here. I hope you're having a great start to 2025. What I want to do in this video is take a look back at how we ended San Diego's real estate in 2024, as well as what's going to drive it in 2025. I really think that there is one factor above all that will determine what happens in San Diego and actually the country's real estate, and it's pretty obvious when I lay it out. But let's start with a look at where we are as we finish 2024 historically compared to the last several years. I want to start our look into San Diego housing with something other than price, and that is the volume of sales. I think it'll be really illustrative to show you some coming weakness, and this is a great place to start. First of all, last year we sold 23,000 homes, which was an increase over the previous year, which was almost 22,000, but a very large decrease over where we've been historically. If you look at the pandemic year, we sold 36,000 homes in the first year of the pandemic, and then it rose in 2021 to 38,000. That was a banner year. 2022 interest rates hit, and we saw a slump. Now, success rate is also important. What percentage of the homes listed actually sold? In 2020, it was 78%. 2021 was the phenomenal year at 87%. Interest rates hit, we fell. 2023, a bit of a rebound, but then last year was really bad at 71%. So what we're seeing is over historical averages, a very large reduction in the number of homes sold, and recently the success rate is falling. That would make you think prices are coming down, and they are. Let's take a look. This data is courtesy of the San Diego Association of Realtors, and I've ran the median price of San Diego homes, and I've gone back 10 years because I want you to really appreciate the growth we've seen and the change in growth we saw once all the money hit the economy from COVID. So if you go back here from 2014 January up through the end of 2020, we started at 400,000 median, and then we ended up here by May of 2020, we're at 585. Healthy growth, almost 50% over a 6-year term. But look at what happened once we got into COVID. From May of 2020 at 585 to a short-term peaker of April of 22, so we're really looking at 24 months at 854. That's $300,000, or about 55 to 60% in 2 years. That was phenomenal. However, let me shorten this up a little bit, and I want you to see, that's what I want you to really take away. If we looked at that same May 22, that short-term peak we just saw, and we come out 31 months to December of 2024, we're at 859,000, which means we went from 855 to 859,000 in 30 months. That's 0.5% in 30 months. So while the easy way to look at it when you're looking at 10 years is, hey, things are always going up. Over the last 2.5 years, we are basically level. So here's a 3-year look. We basically are right at where we were 2.5 years ago. That doesn't mean that the affordability is better or the same. Rates have gone up, making the monthly payment higher. The values have stayed where they are. So let's take a look at interest rates and see what they've done to cause this. Now I want to introduce you to Fred. Fred is the Federal Reserve Economic Data Database, and this is their graph of 30-year mortgages, 30-year fixed mortgages going back to 1972. Those of you who were around in the 80s will remember this joyous time of 22% inflation, 17% interest rates, and gas lines where you could buy gas on an odd or even day based on your license plate. Ever since then, if you come back even here to 84, what we have seen is a steady decline of interest rates, and that has fueled the steady growth in housing values. As we went from 14.5% down to 2.75%, housing values shot up because the payment was much more manageable. But look at what happened here in 2022. Right when we said the prices have leveled out, this is what happened to interest rates. And it happened very quickly. If you look, and you may not be able to see this because of the resolution, but this is December 23rd of 2021. So the end of 2021, the average 30-year mortgage was 3.05%. We come up to later that year, November of 2022. So 11 months later, rates were at 7%. So that's more than doubled. It's up 130% in 1 year, and that put the slam on the prices. While this is the major part of why prices have plateaued, I want to look at a shorter time view to develop a thesis for what I think is going to happen in 2025. All right, now we're looking at a 10-year version of the same graph. And I really just have one point I want to make here. And that is, if you look as late as January 2022, rates were in the low threes. What this means is everybody who purchased a home before the end of 2021 in this range here has an interest rate around 3%. More importantly, everybody who purchases a home in this range previously, anytime before 2021, had a chance to refinance their mortgage down to 3 to 3.5%. So for most intents and purposes, every home that was purchased prior to the beginning of 2022 has a mortgage rate under 3.5%. That gets very important when we try and figure out why are inventories so low? Why aren't people selling? Well, if you own a house that you purchased back prior to 2022 at 3.5% interest rates, if you sell it and buy another house, you're up here at 6 to 7% interest rates. And let's take a look at what that does to your budget. What we're going to look at now is the monthly payment on every $100,000 of a 30-year fixed mortgage based on the percentage interest rate. At 3%, which is where we were prior to January of 2022, you're looking at $421. 4%, it goes up to $477. And at 5%, that payment is $536. We hit 6%, and the payment goes up to $600 per month for the same mortgage. At 7%, where we're flirting with now, we're at $665, which is a 57% increase over what the folks were paying at 3%. And now you can see why they can't really sell their house and buy anything equivalent. It's a 57% increase. Were we to go to 8%, it's all the way up to $733. Now, just to make you feel a little better, your grandparents' lives, back in 81, 82, they were paying 18%. And that came out to $1,500, and nobody was buying or selling real estate. So what does this overall mean? Well, got to realize that buyers, if you're a first-time home buyer, basically all you've seen is 6.5 to 7.5%. So if we stay above 7.25 up, I think we're going to have very low demand, and I think we're going to see prices continue to fall. Once we get below 7, the buyers who've only seen 6.5 to 7.5% are going to start coming back, and we'll hit kind of an equilibrium. Once we hit 6.5, say the range between 5.5 and 6.5, we're going to be in a unique situation where the buyers are going to get super excited, but the sellers can't yet make a move. So we're going to have a big shortage of inventory again, and that's where we could see prices boom. Once we hit 5%, I think you see the sellers re-enter the market. So let me kind of summarize that for you. We've looked at historical interest rates, what interest rates do to a monthly payment, and what has recently happened with interest rates and pricing. Now let's look at my prediction for housing prices versus interest rates for 2025. Above 7.25%, most sales are going to be forced. Death, divorce, forced relocation, prices are going to continue to fall. Between 6.5 and 7.25%, we're going to hit an equilibrium. Prices will stabilize. Once we get between 5.5 and 6%, buyers are going to be really excited, but sellers are going to be stuck, and this could get explosive. Lack of inventory, multiple offers, prices surge. You could see 15 to 20% annual growth here. Once we get below 5.5%, we're going to hit another equilibrium, but prices will continue to increase due to increasing affordability. So this is where people will be able to move up, and we'll get kind of more of a normal market, and you're going to see maybe 5 to 10% appreciation. So now that I put it down, guaranteed that something else will happen. Thank you for watching. I really appreciate your time. If you have any questions, leave in the comments below. I'll do my best to answer. If you're in San Diego, you're thinking of selling your house, you need help buying or investing in real estate, look me up. I'm easy to find, or give me a DM. If you're interested in our real estate investment project, after a year, we finally went vertical a couple months ago, and that video will be here. If you're interested in our side private life, where we are trying to build a disabled boys home for our son, we recently moved in, and that video will be here. Once again, thank you very much, and make it a great year.